Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have Jeff Kendrick, the CEO of Cematrix Corporation. Cematrix trades on the TSX Venture Exchange under the symbol CVX and on the OTC under the symbol CTXXF. The company is trading at 52 cents with roughly 62 million shares outstanding, or a $32 million market cap. I'd now like to hand it over to Paul Andriola.
Hey, thanks, Trevor. Thanks, Jeff, for joining us today. I've known about Cematrix for a couple years, and we've been following quite closely in terms of your progress. Happy to have you here, and as we always do, we love to start off by having our CEO give a brief sort of pitch in terms of what you guys do, and then I'll let you sort of take it from there. And I understand you have a presentation for us, so Jeff, welcome, and go to it.
Well, thank you, Paul, and thanks, Trevor. And I will share my screen here, just if you give me 2 seconds. Bring up our PowerPoint presentation, because I think it's the easiest way to give a quick overview. Just as we get started, I'm a CA, and I'm one of the founders of Cematrix. Cematrix is in the business of cellular concrete, and cellular concrete is essentially the fastest growing construction materials market in the world. Okay, we essentially started in the oil and gas construction business back in the early 2000s, and things were taking off crazy for us. It looked like the hockey stick approach. Unfortunately, the 2008 and 9 crash happened. We had to change 180 degrees and focus on the infrastructure market, which is a whole new area of marketing, new customer base, and it takes time to get approval of the different provinces and product in the ground and grow the business. But essentially we're there. And during that time that we've been growing that Canadian market, we had the opportunity over the past couple of years to acquire 2 of the leading suppliers of cellular concrete in the US. So I'll quickly move to the 3rd slide. Who we are. Essentially, we're the world leader in this technology, and we're the leading North American supplier and installer of this material as well. It's a technologically advanced, specialized premium material, primarily used in lightweight construction in bridges, roads, tunnels, MSC panel backfill, bridge abutment backfill, overpass backfill, so many, many applications. Key investor considerations, of course, we're the fastest growing leader across North America, are growing both organically and through strategic M&A, grown from revenues of $7.6 million in 2017 to anticipated $40 to $45 million this year. Our current backlog exceeds $80 million, and we just landed the largest project ever led in North America. That was a $16 million project in North Carolina involving 15 overpasses, and it could double in size before we're done. Current bid pipeline exceeds $300 million. Those are projects that we've been approached on for a design, a quote, or both. We're profitable this year with strong operating margins of 25 to 30%, quite a bit higher than the typical construction industry because we're supplying a construction material. And with the acquisitions and the 3 companies or operating companies, we actually have a seasonally adjusted production capacity that can produce over 175 million in sales. So lots of room to grow within our company. And of course, we just completed a $5.5 million debenture that was heavily oversubscribed. We have state-of-the-art proprietary technologies. Because of our technology, our product saves customers significant time and money. And we're also lighter and stronger and faster than all of our competition, which gives us a leg up in all of our competition throughout North America, because the lighter and stronger, the better the material for these applications. And because we use a significant amount of cement in our product, we've developed a very significant relationship with Lafarge Cement. And we're also developing some other strategic alliances with our other cement suppliers as well. COVID essentially has had very little impact on our business until recently. I must admit, over the past month or so, we've seen not projects canceled, but projects slow down 1 month to 2 months. Shouldn't affect our overall forecast for the year, and it's mostly related on just these projects taking longer to go into the ground because of the COVID situation. The COVID situation should actually be a more positive benefit for Cematrix, as You've heard most governments pour money into infrastructure to get America working again, and we've heard that from both Trump, Trudeau, and other provincial leaders as well. Next slide is current corporate structure of the 3 companies we acquired. 2 companies out of the U.S., Pacific International Group out of Bellingham, Washington, and Mixon Site out of Chicago. They're both in the cellular concrete business, but both providing different technologies to the group. And because we are the leaders in that group, we provided technology to them to make their company better as well. Next slide. So what is cellular concrete? We never replace regular concrete. It's important to know. So we take ready-mix concrete, take all the sand and gravel out, replace it with a carefully constituted air bubble system. By doing that, we create a lightweight material that's insulating, is highly flowable, and has some structural properties and many other benefits compared to what we replace. How we make it is the next slide. We have 2 different types of equipment, dry batch equipment that takes a delivery of a dry batch cement from Lafarge, or our smaller equipment used on municipal type projects that are a wet mix system that take a delivery of a pre-designed ready mix. Many proprietary technologies, including advanced material mix designs, foaming agents, additives. Again, these technologies are not patented because they mostly relate to formulas. And if you patent formulas, people just copy them. So we protect them through trade secrets and other means within the company. We're the only cellular concrete tunnel supplier in North America that has equipment specifically designed for the heavy tunnel grout market. So basically, when there is a tunnel grouting job to do, we're basically called and we do that project. We're also the only one involved in underwater cellular concrete placement technology, and we're the only full surface cellular concrete supplier involved in R&D. One of our main projects right now is with Canadian Highways, and they're proving out the use of cellular concrete as an underlay material where roads cross weak and unstable soils, and that's a significant issue in North America, not just Canada. Next slide. Our customer base is essentially engineering companies. We don't have a traditional sales situation. We're educating the engineer world. They are the ones that specify material into projects. The projects then go out to tender, and the general contractors call us for a price. And then essentially in Canada, since we're the only large volume supplier, they send us a contract. In the US, we're the leading supplier, so in the most cases, we land those projects as well. Why is it such a big market? Is we're in 3 billion-dollar business verticals, which is the next slide. First being infrastructure, including tunnels. Second being industrial and mining, when including oil and gas area, which we're still involved with in some respects. And those are commercial and seismic area as well, all large billion-dollar applications. What do we replace? We don't replace regular concrete. We replace weak and unstable soils, or we float over top of them as a floating base. We replace EPS block, which are those large styrofoam blocks, and we replace expensive steel or pile construction, some cement grouts, and 4x8 rigid insulations, particularly the blue styrofoam that are used in industrial applications. We're also greener and more sustainable than the products that we replace. First of all, we save energy as an insulator, whether it's under a road or under a facility. We reduce construction traffic on site because we turn a 40 or a 40-ton bulker into 120 cubic meters of material, saving the movement of 15 trucks of ready mix. We're more positive for the environmental impact because we're replacing material like EPS blocks and rigid insulations that don't break down when they're landfilled. And because we make the roads last longer and the bridges last longer, we're going to save significant time, not only on maintenance, but on the replacement of those projects as well. And finally, we use a tremendous amount of fly ash and slag in our material, and typically those products would have been landfilled. Competitive advantage, as mentioned earlier, we save time and money for all of our customers and provide a better overall long-term solution in everything we do. Quick example, in a small tunnel project under the North Saskatchewan River in Edmonton, it was originally specified to use a traditional grout that would have taken 2 months to place under high pressure. We completed that project in 2 days at a lower material cost. The reason we're able to do that is our material, or the air bubbles in our material, act like frictionless ball bearings. So we can pump our large volumes, long distances from one location. Again, 2 days versus 2 weeks at a lower material cost. Finally, our growth strategy was and will continue to be right from the inception of the business. That is to continue to lobby the engineering world and the construction world about our products so that they will specify the material into their projects. Of course, the successful execution of those projects, which has been going on since 2020, and now most of our projects become from referrals or actually projects that come out on sites like Construct Connect. So it's actually specified into these projects. Eventually, we'll get back into M&A of other cellular concrete suppliers and complementary companies. But this year, we'll focus on putting the $40 million in ground that we already have in place to complete, and developing the synergies and best practices between the three companies, and of course, sharing the technologies between the three companies as well. In the future, we'll look at continuing to develop those strategic alliances and expanding into international markets and potential licensing and franchising opportunities as well. And that's kind of Cematrix in a nutshell. So I'll stop there, pass it back to you, Paul, and hopefully that's a good, quick overview of our product and the opportunity with Cematrix.
That's perfect. Thank you. Thanks, Jeff. You've actually covered off a lot of questions, so you're going to save me a lot of time and effort here. How big is this opportunity for you guys? And I mean, are you geographically limited in terms of where you can operate right now?
Two good questions. Firstly, not geographically limited. So we can do projects anywhere in North America. We could do that before just with Cematrix because we're completely mobile, but now with having operations in Chicago and in Bellingham, Washington, plus equipment spread all over the US and Canada, we're essentially got North America fully covered. So there's no limitations in that respect. As to the opportunity, we're looking at $40 to $45 million this year, but with continued organic growth, regional expansion, and some M&A transactions as well, we're looking at $100 million within 5 years. Does that adequately answer those questions?
Bear with me 1 second here, just a little bit of a lag here. Yeah, so you mentioned a little bit in terms of who you have to convince as far as sales. Can you guys hear me okay?
We can, yes.
Okay, perfect. Yeah, so a little bit of who you have to convince us to sell the product. You've already got it sort of spec'd in. How much more of that sort of selling or convincing do you have to do to continue to expand, or is it pretty well commonplace now with most of your potential clients?
Not quite. In fact, it's still fairly early stage, and there's two real different markets here. The Canadian market is about 10 years behind the American market. So in Canada, we have regional salespeople that are doing lunch and learns and presentations to engineering world on a daily basis. Of course, the COVID situation has shut a bit of that down this year, and we're now going to be doing webinars in the very near future. In the US, it's completely different. They don't even have salespeople. They can't keep up with the bids and tenders that are coming out each week on Construct Connect, and yet it's still early stage there. And when I say that is that a lot of states are still not even using the product, and in the states that are using the product, some are still not aware of its application or its advantages, particularly the cost and the fact that it's a better overall solution. So to give you an example, in the North Carolina project we just landed, 2 of the 3 P3 bidders that bid on that project bid using traditional construction. So the company or contractor that won that project used our product and of course had an advantage over those other 2 groups. Mm-hmm. So we have to educate those other 2 groups still. And it's not just those 2, but many others within not only the US market, the Canadian market as well.
Mhm. You did mention competitors, and I understand actually one of the companies you acquired was one of, I guess you can consider a competitor. Do you have other opportunities like that where you can either acquire, or is it even worth going after any other acquisitions of competitors?
There are. I mentioned earlier that we acquired 2 of the 4 leading suppliers in the U.S. The other 2 we believe may be for sale, but I'm not going to guarantee that. I haven't spoken to them yet. Again, my focus this year is going to be on strengthening our foundation as a company, putting that $40 million in the ground. But not only the opportunity to buy potentially the 2 larger suppliers, but there are also some medium suppliers that are regionally located that would be beneficial to Cematrix as well. They don't have the equipment or technology that we do, but they certainly have the infrastructure in place, say in the southeastern U.S. or the Texas area, where we do projects right now out of Chicago.
I think I remember you saying that you guys can get up to about 175 million in sort of revenue capacity.
Yes.
Is there anything you need to get there? And if you wanted to go above that, what sort of capital requirements would you have?
Just on an annual basis, even with that capacity level, we have about $500,000 to $750,000 worth of replacement support vehicles and things like that. But the equipment we have is fairly young and has a long life. So when I said 175 million, that's 2.5 million cubic yards of seasonally adjusted production capacity. So that's one shift part of the year, so 3/4 of the year. So even within the equipment we have more capacity. So our biggest limitation is more regional growth on the smaller equipment side, and in adding people on a timely basis and training them. Which is not a lot, because on our small equipment we use 3 to 4 people, and on the larger equipment 4 to 5. So 1 is the operator, 1 is a QC person, 1 is a project manager, and 2 are essentially laborers. So some are skilled workers. The laborers are important and skilled as well, but they're not as critical as both the operator and the QC person or QC technician. So not a lot of things impeding our growth, and not a lot of capital requirements in the short term.
Gotcha. And as far as the product itself, what sort of commodity pricing are you exposed to?
We're exposed on the supply side to cement pricing, which changes every day. Even when markets seem to be failing, cement companies tend to raise their cement prices. But that hasn't been an issue in the past, and we don't expect it to be an issue in the future, because of we're able to pass on that price generally to our competition, or price to the market. As to the competition, there are some low price, high volume, low quality suppliers out there, particularly one that does affect our product, but it's really not commodity pricing yet, but it can be affected by certain competitors that may not be pricing it effectively even for themselves. Right?
Okay. Now, you mentioned that you've done a recent financing. Give us a sense of your balance sheet. Are you happy with where you are in terms of your current capital, and any need for further capital in the near future?
We are happy today. Quite pleased with the financing, $5.5 million financing we did a month and a half ago. That went extremely well. I think we're oversubscribed by between $10 and $15 million. So it was extremely well followed, and we settled on $5.5 million to give us, coverage in case we, had issues with the COVID situation continuing. I mean, we all don't know where that may end in the beginning. I mean, right now it's not hurting us that much. We do have a tremendous amount of warrants outstanding because of that financing and previous financing, many of which are being exercised now. So that would bring in another $6 to $7 million over the next couple of years. However, we're going to be looking at M&A transactions, not only at other potential other competitors in the marketplace, but also complementary companies that may be suppliers in the foaming agent area, or complementary countries in the pumping cement business and that kind of thing in the future. So 2021 and beyond, we'll be looking at other capital funding.
Okay, and so there's, I think, roughly 62 million shares outstanding. Can you give us a sense of insider ownership? Do you have any institutional following? Just a lay of the land of the shareholder base right now.
Yes, insider ownership is only approximately 10%, but we have a group of very close friends and business associates that own another 40% plus, and they've been with us since the beginning. Very wealthy shareholders that don't need to sell their shares. Right? So that's kind of the insider base. The rest is very widely held. We do have some institutional following now. I believe there was 3 institutions that came in the last financing, and we have a lot of other institutional interest now. Now that we're getting to that level of $45 to $50 million in sales and planning to grow to 100 million level within the next 5 years.
Cool. Go back to a little bit the competition side. I mean, there's always a question I like to ask. If you can say the one thing that you do better than the competition, what would that be?
Well, our technology enables us to produce a material that is lighter and stronger than whatever can be supplied in the marketplace today, okay? And because we're replacing or floating over weak and unstable soils, the lighter and the stronger, the better. So it gives us a leg up in the competition. But I think that the bigger thing is that we're highly engineering based. We've developed this company to be highly technical. To our knowledge, none of our competition has engineers on staff. They aren't capable of assisting the customers, and this is an engineered sale, so you require the technical capability. So we landed the North Carolina project because of that. We sent our geotechnical engineer down from Calgary with the US group out of Mixon's site in Chicago. They met with this EPC firm and basically salted away that deal because we can help them design that project to be more profitable for them and faster to complete.
Mm-hmm. Okay, cool. I'm actually going to start taking some questions here from some of the chat questions. So Dave asks, is there a certain type of business that you prefer doing?
We prefer the larger projects, because you almost put the same amount of work into land a small projects as you do a large one. And but why I prefer them is it's exciting to be supplying the product to these major projects. You know, we're like the North Carolina bridge, or we just completed a large tunnel grouting project in New York, and we're completing or working on a couple of large projects in California. It's so impressive to be on these sites and be dealing with this customer. In many cases, a lot of the engineers and the contractors have never used this product before, so they are amazed at its capability. They're amazed at how fast it's placed and set up, and they're amazed at what they save and what they're doing. So everything about it is fun, you know, and I enjoy all of that.
I can imagine the momentum, it sort of builds momentum, because I remember when we were speaking a couple years ago, you had a couple keynote projects, but now that you've got more, how easy is it to sort of point somebody, you know, down the street and say, here's the last one we did? It's got to be helpful in sort of getting more business.
Oh, definitely. I mean, I remember growing up in North Bay, Ontario, and I worked as a carpenter before I went back to school, and I remember working with a contractor there, a house builder in the high-end house building. And I go back to North Bay today and I see those houses, and I can go to people and say, you know, I was part of building that. Well, it's the same thing with cellular concrete. It doesn't matter where we go now. Not only can we present projects that we've done, and with the companies we've acquired as well, but people will stop us on the street and say, hey, Cematrix, I know you guys. I bought shares in you, or I saw you pouring a project, you know, down near my neighborhood the other day, and you know, how are things going? So yeah, it's kind of neat as the business has developed and becoming more well known right across North America. And I get calls regularly about them seeing our vehicles, whether it's in Northern Ontario or down in Dallas, Texas, or in Los Angeles, California, and that's what people talk to me about. They're not talking to me about the projects necessarily, but more about the visibility of the company.
Yeah, that's great. And you, for most projects, and maybe all projects, you guys bring in the crews to install. Is that correct?
Exactly right. Yeah.
Okay, so there's no you don't sell to outside sort of service installers or providers. You guys are experts at what you do, and you're hired to install and place the concrete as well.
Oh, absolutely. And it's a very good thing to keep in mind is that this product has been around since, they say, the Roman days. In more modern days, in about 70 or 80 years ago, was developed in Europe, and ACC blocks, which were developed or sold all over Europe. The product itself is, and now I've lost my train of thought because I got sidelined. What was the question again? Sorry, Paul.
It has to do with you guys experts at installing it and not sort of outsourcing the installation.
Exactly, because part of the technology is the process, the applications engineering, and knowing exactly what you're doing on site. It's not something that you could franchise out or license easily, because there is so much potential for failure. And what I was getting at about the other suppliers there have been a lot of companies that failed at this. And even the cement companies have been trying to develop this market for over 35 years and weren't able to do it. So it's not simple. It may look simple, but it's an engineered product and sale. Not only do you have to sell it that way, but you have to produce it and place it that way as well.
So I think if I remember correctly, you guys did about 3.9, call it $4 million in revenue last quarter. There must be a degree of seasonality in your business and certainly some lumpiness because it's a lot of project-based revenue. Let's try to break down what number do you need in terms of revenue to be break even or to be profitable. And a secondary question is the $82 million in backlog. What's the time frame that you deliver that 82 million?
Okay, so the first question is, of course, we are seasonal, and the first quarter, if we have any sales, that's a bonus. Okay, so, and even in the second quarter, when we were in Canada in particular, the construction season really wouldn't start till the 1st of July. So most of our business ended up being between July and October every year. US is a little bit different, and that's one of the advantages of acquiring those US companies. You get less of a seasonal business, and particularly the tunnel side. Tunnels will operate all year round because they're underground. So, we could be pouring a tunnel in Toronto in the middle of winter, but they still tend to follow the construction season. So we break even, depending on the makeup of the sales, at anywhere around $20 to $25 million. Okay, now with the three companies. Makeup of the sales could be lower than that, or it could be slightly higher than that. As to the breakdown in sales, you'll see a growth in the second quarter. We actually expected to do more in the second quarter this year, but because of the COVID situation, some of our projects, they didn't get canceled. It just got delayed a little bit. One that was supposed to start in April just started this week in Huntsville, Ontario, for example. So, but that's the way it is. And we just did one, for example, in Texas that got delayed a month because of COVID outbreak on the site there. So again, not canceled, but again, a delay of a project that was supposed to be done by the end of June. We'll see very strong second quarter, probably our best yet. We'll see a huge third quarter and a very strong fourth quarter. And that'll be typical of our business for the foreseeable future. The 82 million, 40 million of that is scheduled to do this year, okay? The balance is mostly scheduled for next year, with some of it floating into 2022. But mostly it's related to the current year and the following year.
So clearly then, if 20 to 25 million in annual sales is your sort of break even, if you're doing 40 million this year, 40 million next year, you're pretty well, you're a profitable company.
Very.
Yeah.
And you know, we should do an EBITDA between 6 and 7 million before earnout this year. Earnout is on the Pacific International growth side because the Mixon site acquisition was done a different way, and that earnout was calculated as part of the acquisition. So somewhere between $500,000 to $1 million would be the earnout, and that's over a 4-year period with the former owner of Pacific International Growth. So, but still, strong cash flow, strong EBITDA, and you talked and asked about cash flow before and what are capital requirements. Of course, the cash flow we'll be earning from the business will help in that capital growth as well.
And total debt?
Total debt, as announced at the last report before we, so May 30 or March 31st, which is the last time we disclosed, was 14 million. We added another to 5.5 million of the convertible debenture following year end. Now, since then, we've reduced some debt through some repayment of short-term interest, high interest debt, and all of our operating lines as well. So.
Gotcha. And I guess, yeah, I think you've done a great job in sort of getting us up to speed here. The last sort of couple questions probably just around the stock and market awareness. I know I've met you at a couple investor conferences. What are you going to do to just get the story out? It sounds like quite a compelling story. How are you going to get it to investors?
Well, what's interesting for the investor side, and some of the people on the line will know this, is that up until we did the acquisition of Mixon site in 2018, we did very little in the way of investor relations work. You know, I met you at a conference a couple of years ago and some others as well. But our idea at that time is we didn't need to raise capital. So, and we were really developing the foundation in the market in Canada. So there wasn't a need to get out and really start to share the story. Now that we've completed the 2 acquisitions, of course, we're out there on a regular basis, completed a number of conferences last year. This is our, I've done a number of virtual presentations, probably over 50 since the COVID outbreak, and they went extremely well. We've now lined up the Sindori conference at the end of June, and we'll be looking at other investor conferences, these virtual conferences throughout the year, and planning on being more of a face in the marketplace now that, you know, we're growing to a, you know, $40 to $50 million company and profitable as well. So you'll see us out there on quite a regular basis. And of course, we're being followed by a couple of research groups now, both them partners and Claris out of Toronto. And of course, we're mentioned on BNN on a regular basis now too as well. And now it's, you know, not only do we want to get out there and of course show the base of Cematrix, but also realize on the profitability that we have in place to put in place, right? So we want to realize on that 40 million in sales, and hopefully the COVID situation doesn't cause us any more delays in projects. And even if it will, we will still be profitable and still be growing, and those sales won't be canceled; they'll just be done next year.
Yeah, no, fair enough. Yeah, we've sort of covered. You did a great job presenting. You've maybe run out of questions sooner than I usually do, so that's a good sign. But if there is a message to investors, or even a sense of what investors should look for over the next sort of 6 to 12 months, what would that be?
There's lots to look forward to. We're still early stage in this marketplace, but it will be a bumpy or lumpy ride, okay? And you can tell that by the project that we just landed in North Carolina. It's $16 million. And when I say it could double in size, because if we do a good job and the EPC firm we're working with does a good job, they'll get the second half of that project, right? Which could double in size. So, but you know, when you get a $16 million project, that's not like doing a $5,000 project down the street in Calgary. So there can be some lumpiness. And as other states and engineering firms come on board in the use of cellular concrete, you're going to see some strong growth. We saw organically between 25 and 30% last year. That could grow to between 45 and 50% in the future, but it'll be lumpy, okay? It won't be a guarantee tomorrow. Next year we could grow like crazy, and then we could see a little bit of a slowdown that could grow like crazy again. And it's just, again, because this is the nature of the business that we're in. Plus, engineers are coming out with new applications for it every day. And so there's new product applications that we don't even know about that will be coming out. And we're involved, as I mentioned earlier, in R&D. One of the interesting things about that project we're working on with the Ministry of the Department of Highways and the University of Waterloo in Ontario, with the MTO in Ontario as well, is that they've proven through their initial testing that Cematrix is a better underlay than any other material that they use. So it could actually make all highways better. Now, we don't expect them to ever start speccing it into all highways. And if they do, we would consider it a bonus. But just highways over weak and unstable soils is a huge market. And what they're doing right now in that study is not, we're already specced into those types of projects. What they want to do right now is prove that out and then make it the Canadian highway specification for the future. So that will become great news for Cematrix and its shareholders. And so that is just one of the big opportunities we are working on. You can see by the overpass projects that we're starting to land that is a huge business as well, and that will continue to grow. And so is the tunnel business, because all new infrastructure under big cities like New York and Toronto and Vancouver and Los Angeles, it's all being built through tunnels. And when I mean tunnels is tunnels to carry water lines or sewer lines or other. So essentially they dig a large tunnel, put in 1 or 2 or 3 or 4 water lines or sewer lines, and we grout around all of that stuff. So some of these projects can be, 50 to 100,000 to 200,000 cubic meters. Well, that's 5 times last year's Canadian volume in one project alone. So tremendous opportunity for growth. You will see lumpiness. You will see strong profitability, and you will see a growing $100 million company within 5 years as Cematrix. So good time to become part of Cematrix. We're still undervalued in the marketplace. And as you can see by the research studies that just came out, they're looking at $1.20 or $1.25 stock within a reasonable period of time, and we expect to be there within a year.
Fantastic. Jeff, if investors want more information, what's your website address?
It's cematrix.com.
And if somebody wanted to reach out to you, is there an email or contact information they can get?
Jeff, Jeff, at cematrix.com. All of that information is on our website or with our 2 IR firms, being Bristol Capital out of the Toronto area and the Howard Group out of Calgary. And both of them are quite familiar with our business too. I'm not available. Certainly welcome to talk to them. All of our presentations are on their sites and on our site as well. And I have a completely open door policy here, and I love to talk to investors. So welcome your calls at any time.
Fantastic. Jeff, I want to thank you again. It was great to get caught up on the story. I appreciate it. Trevor, I'm going to hand this over to you. So take it away, Trev.
Awesome. Yeah, thanks again, Jeff. And, we're looking forward to, future developments from the company and pending catalysts, as well as profitability out of the company. It's quite an exciting milestone. So we'll be tracking and following along.
Thanks, Trevor. Thanks, Paul.
All the best. Talk to you soon.
Keep safe.
Okay. Bye-bye. Bye-bye.